Okay, so I put together some slides so that sometimes a visual slide will help because it can be kind of complicated with the difference between term and whole life and universal life, which is all in different videos here. So when you think about term insurance, think about, the sand going through the hourglass here, and when it's done, it's done. Okay, that's what term life insurance means. So term insurance is designed to provide life insurance for that limited period of time. If you have term insurance, it may last 5 years, it may last 10 years, it may last 15 years, up to 30 years. Now, term insurance is called pure protection. That means that there's no cash value, there's no equity. Think about when you rent versus when you buy a house, okay? It's just providing life insurance, just like an apartment is providing a roof over your head. It gives you that peace of mind, okay, that you have protection. All right, but it doesn't build equity. And that's the way it is here. So if you have a 10-year term policy, for example, that means at the end of 10 years, the policy goes away. It's done what it should do. Okay, so usually have, a term policy up to 30 years. Now, what will happen here is you have a term policy and you have a face amount. You may call it a face value, and this is the amount that will be paid if the insured were to die. So for example, to give you an idea, kind of going over here to the whiteboard so we can summarize some things. When you have a term policy, let's say, for example, you have a term policy, it is a 10-year term. Okay, and let's say the premium is $50 a month, just to make it easy. All right, the face amount, the death benefit could be, $50,000. All right, so that means that this face amount, okay, when it's called a level term policy, that means that for 10 years, this face amount will not go up, this face amount will not go down, and the premium will stay the same, which is $50 a month. Okay, so kind of keep that in mind because a lot of times your state test will ask how a level term will be with the premium and with the face amount. So when it comes to a level term, the face amount doesn't change, neither does that premium. So I gave you a little bit of a presentation here, just kind of so you can eyeball it. So basically you have the death benefit remains the same when you have a level term, and the premium remains the same for that term. And that is, a typical test question that you can kind of sometimes see. Now, what happens when you are done with 10 years? Okay, so when you're done with 10 years, you can reapply and you can basically keep going with that term policy. And I'll show you an illustration for that. So a lot of these term policies would have a renewable in them. And so what that means is that the policy after 10 years will keep going. Okay, so the death benefit remains the same, but the premium will increase because you are older. Okay, now the beauty of that is if you come up at the end of your term and you say, hey, I still need life insurance, and maybe your health has been compromised, maybe it's been challenged, maybe you've been diagnosed with something, and you say, hey, I need this life insurance to last for another year. Okay, the death benefit will stay the same. Okay, but the premium will always go up because, again, you are older. So when you're talking about a level term premium, keep in mind for that term, for that 5-year, 10-year, 15, 20-year, whatever term it is, death benefit stays the same, premium stays the same. Okay, then you can renew it. Death benefit will still stay the same, premium will go up, but there won't be any evidence of insurability, as it will be as if you are still healthy, which is a very nice thing to have. Now, decreasing term, okay, decreasing term, when you think about decreasing term, think about like mortgage life, okay? So what happens here is your premium still remains the same, just like it did with the level term, but your death benefit goes down as you, for example, pay that house off. Now that means that with decreasing term, okay, going back over here to the whiteboard, when you have level term, the premium stays the same, the face amount stays the same. So with decreasing term, what would happen is, let's say you had a 10-year decreasing term. okay, then your premium would probably be less because again, what's happening here is your face amount is decreasing, okay, as you pay that loan off. So that's one of the advantages of have a decreasing term is, of course, the premium is going to be a little bit less because that death benefit is going down. So again, I think that is a good illustration of how that works there. Now, one of the beauties of a term policy is that you can convert it. So at the end of 10 years, you can convert it for a permanent policy without evidence of insurability. And so if I have a client and their policy comes up and they want to still have life insurance, but maybe they've been diagnosed with high blood pressure or diagnosed with some type of cancer. And right now they may be uninsurable. And so we can actually convert that to more of a permanent policy and it's as if they are still healthy, which is one of the beauties of term. So your term policy has a renewable in it where you can just keep renewing it. But of course, that premium is going to go up, but the death benefit stays the same. Or you can convert it to a permanent policy. You never convert term to term. You never convert permanent to term. You always convert term to permanent. Okay. All right, guys. So I hope that helps you understand a little bit more about term insurance. Now, if you want more information like this and a lot more detail to help you understand those terms and concepts, and you're studying for your state tests in any state, I have some great supplemental materials that will supplement your state laws. It's $97 for 110 days access to PDF worksheets, videos, and cheat sheets. And here is the website here. It's tdinsuranceexamprep.com. All right, I hope to catch you in another video.